Welcome to this webinar on the strategies to detect and mitigate payments fraud. I am Marielle Barclay, the editor of this award-winning Global Treasury Leaders Program, which is organized by The Economist, Impact, and sponsored by Deutsche Bank. The program has two objectives. On one hand, to connect treasurers around the world, and secondly, to share thought leadership with those same treasurers. We do this through a series of activities every year, which include summits in different regions, webinars like this one you are joining today, articles, and an online community where we host these contents. The community is open to corporates only, and this allows treasurers from all over the world to connect and exchange ideas on any topic of their interest. It is totally free, and I am now going to send you a link via the chat facility so that you can join if you would like to. Just remember to choose the Global Treasury Leaders Network when asked what groups you would like to join. Feel free to join as many as you like, but it's the Global Treasury Leaders Network that you want for this particular program. Going back to today's webinar, the idea is to make this session as interactive as possible. So please ask as many questions as you would like using the questions tab on the right-hand side of your screen. And please send them to us as soon as you think of them. Otherwise, you will forget. We'll bring them up when appropriate. So without further ado, please let me introduce this webinar's chair, Greg Toussaint, who is a director at Edgar Dunn, an independent and global strategy consulting firm specializing in payments and fintech. Greg, over to you.
Thank you very much, Marielle. As you mentioned, my name is Greg Toussaint. I'm a director at Edgar Dunn & Company, a strategy consultancy specialized in payments, and I have the pleasure today to moderate our panel discussion on fraud. Fraud is a key topic for any types of companies to secure the financial aspects, talking to different providers from corporate, but also in the payment and banking industry. The cost of fraud is several billions across the value chain, and this creates some significant impacts for all stakeholders. As Marielle mentioned, if you would like to ask questions, please go ahead and ask questions as we go during the webinar so we can take it. And we're very lucky today because we have very experienced speakers, and I will let each of them introduce themselves. Kemi, would you like to introduce yourself, please?
Yes, I will. Thanks for having me. My name is Kemi Bolarin, the head of Treasury Europe at GXO Logistics, Inc. GXO is a global contract logistics company that manages outsourced supply chains and warehousing and reverse logistics for blue chip customers in over 30 countries.
Thank you, Kemi. And our other panelist is Leon. Leon, would you like to introduce yourself, please?
Yes, again, thanks for having me. My name is Leon Brown. I'm the Global Risk and Compliance Manager for Richemont. Richemont is a holding company for some quite famous luxury watch and jewelry maisons. I'm responsible for the anti-fraud global strategy, as well as payments and compliance topics around payment acceptance and processing.
Thank you, Len. Ronan, would you like to introduce yourself as well?
Hey everyone, I'm the Treasury team based in Dublin. Honeywell is a software industrial conglomerate, mainly in the B2B space.
Thank you, Ronan. And our fourth speaker today is Chema. Would you like to introduce yourself, please?
Yes, thank you, Greg. So my name is Jose Buey. Chema is my short name. I'm based in the nice city of Barcelona, which probably some of you could recognize me because of the wallpaper behind myself. So I'm part of the Deutsche Bank cash product team. I've been in the bank for quite a number of years, close to 20 years in different product roles. Currently, I'm responsible for the client account services solutions globally. Basically, my role focuses on more the kind of the traditional, cash products themes like accounts, statements, but also we are looking into more innovative solutions, like how do we basically do real-time responses for clients that are looking for, instant treasury? How do we basically look into offering solutions like account regulation, which is one of the solutions that I will speak later on in the call today. Thank you, Greg.
Thank you, Chairman. Looking forward to it. So we're quite lucky because we have a very wealth of experience with all the different speakers. For our webinar today, we'll structure our discussion in 3 parts. First, we'll have a look at what are the different types of payment fraud and what are the key trends. We'll then move to the second part, how can corporates effectively protect from payment fraud? And we'll move to the third part, is an opening to the future. What can we expect in the future? So without waiting further ado, let's get into the details of the different types of payment fraud and the different key trends. Kemi, starting from your perspective of GXO Logistics, what are the different types of frauds that you see, and the key recent trends also that you see in the fraud space?
Indeed, and thank you very much. So I'll be speaking to B2B payment frauds there. From my perspective, yes, you can easily split payment frauds into 2. You've got the internal, you've got the external. And business payment fraud has always been and will always be at the forefront of corporate concerns, particularly as the digital landscape, continues to evolve. Of course, together with that comes the complexity of the attacks. So regarding external B2B payment frauds, I would cap at top 4. We hear consistently about business email compromise, wrapping in phishing and spear phishing as well. This involves cyber criminals impersonating company executives on vendors via emails to trick employees into making fraudulent payments or disclosing sensitive information. I mean, the BEC scam relies heavily on social engineering. So this is where technology now comes to play, in enhancing payment frauds. I mean, when we talk about phishing attacks, we're talking about fake invoices, payment requests, or login pages being designed to steal credentials. Then you have, second type of external payment fraud, authorized push payments, where businesses are deceived into authorizing payments to fraudulent accounts. Thirdly, I will touch on account takeover payment fraud, where cyber criminals again, gain unauthorized access to legitimate accounts, typically by stealing login details or exploiting vulnerabilities in security protocols. And of course, one that is as old as time itself, the classic check fraud. I mean, the first issued check was in 1659, and if you think about check fraud being prevalent, yes, it is. It's still it's got a really high success rate, particularly in geographies, where the electronic payment space has not really been fully embraced. Then the second sort of type of frauds, we're talking about internal payment frauds. You can't talk about external and then not talk about the internal payment fraud. So this is what you would typically call the insider fraud. Committed by employees or someone within the company. It was observed that levels of insider fraud increased with the shift to hybrid working, and likely to increase further as remote working becomes the norm in our working lives. And under insider fraud, I would add things like employee embezzlement, procurement fraud, invoice fraud, payment diversion fraud. This is where employees would redirect legitimate payments intended for vendors or suppliers to unauthorized accounts. If we want to touch on recent trends, of course, we can't but bring in, the impact of technology. The recent trends in B2B payment frauds are definitely linked to technology. It's inevitable because as technology advances, so will the sophistication of cyber criminals and the use of social engineering to commit payment fraud. You hear about the account takeover, you hear about the payment diversion. All of these thrive on social engineering, the deep fakes, the generative AI scams, which involve the use of advanced algorithms to create synthetic content that appears authentic. Again, for all the benefits of open banking, enhancing fast, real-time consumer experiences, the concept is faced with fraud challenges. I mean, the core of this issue lies in the fact that there's an increased exposure of sensitive consumer data out there. And as institutions open their APIs to third-party providers, there's a broadening of the attack surface for cyber criminals. So again, that is a trend, that is actually picking, and many of the fintech companies out there are now paying attention as to how can they, make sure that they're boosting the defenses. And this is what I call the duality of the artificial intelligence, whereby cyber criminals are using the evolution of AI to increase their sophistication, and then we need to use the same AI to combat payment fraud.
Yeah, thanks, Kemi. And this is really a good and comprehensive overview of the different types of fraud, both internal and external, and the different key trends. Moving to you, Ronan, from your experience at Honeywell, do you agree with Kemi? What do you see also in terms of the trends related to in the fraud area?
Yeah, Kemi definitely gave a very worrying list of all the different activity that's going on there, and the reality is it's growing, it's getting ever more complicated. So what we do at Honeywell, we spend a lot of time speaking to our banks about fraud prevention, fraud awareness, to make sure that we're as educated as we can be, as a first line of defense in terms of how we can protect the company. So the only thing I would add, like, again, to what Kemi was saying, we're certainly seeing the potential internal, external threats, social engineering, phishing, and so forth. One thing that I would add, though, is that we are seeing an increased use of, let's say, the Honeywell name, or our name, in terms of a scammer trying to pretend that they're us, so trying to say Honeywell has changed their bank details, going to one of our customers that would potentially be less sophisticated, and trying then to get payments redirected to a non-Honeywell account. So we're getting notified sometimes, potentially when it's too late, when money's gone, or ideally before anything is done, so we can work with our customer on our banking partners to try and lock that down as quickly as possible by using our network of banks and letting them know that this is happening, to see if they're able to at least monitor the suspect accounts, so that our customers are safe.
Yeah, thanks, Ronan. And you're right, Kemi. Ronan, you've listed a high list of the numerous list of different threats that corporates need to take into account, and stakes are very high indeed. And Leon, if we move to you from your perspective as Richmond, as a group with different brands in the luxury sector, payment fraud, be it in store or online with a digital sales channel, can be quite a threat as well. What do you see as key trends in this space?
Yeah, so I can speak more from a B2C perspective. What we see definitely is an increase in, say, AI-assisted fraud attacks. So I refer to bot attacks, where we will see multiple payment attempts within a short space of time, either to bypass our rules or to just basically check if the card has funds on it. Well, as you know, card numbers are now easily accessible on the dark web. We also see an increase in account takeovers. So an account takeover from our perspective is when the obviously the customers or the fraudster has access to the customer's bank account, and they're able to clean what I'd say a clean order. So things like ABS will match, the billing and shipping address will match. So from the perspective of the fraud team, it looks like a genuine order, but it's in fact an account takeover. What I will say is, I know that many merchants are having the same issue, is that since COVID, we are now seeing an increase in, say, opportunist fraudsters. So customers trying to commit fraud using their own credentials. An example of this is what we see now is an increase in, say, we call it first-party friendly fraud, where the client is even claiming that the parcel is empty or the most expensive item is missing. And in some cases, we've even received parcels with a tin of baked beans, a book, an old catalog, you name it. They try to return it instead of the product that they purchased. And by friendly fraud, what we see as well is customers trying to say claim that the parcel has been emptied, but try to call our CRC teams to try and push them to process a refund as soon as possible. And what we tend to see is that it will, say, name drop our most senior directors to try and create a time sensitive situation. So that's mostly from our side.
Yeah, thanks, and you're right. The rise of AI threats, also the impact of friendly fraud, are definitely challenges for merchants, and it's sometimes difficult to counter that. I'm not sure, I haven't heard so many baked beans or all catalog story, but that being said, it's a real threat. Chema, moving now to you from the perspective of a large financial institution like Deutsche Banks, what are the key recent trends that you see related to fraud based on your experience?
Absolutely, Greg. I think that when we speak to corporate treasurers, one of the topics that is definitely coming up in most of the conversation is fraud prevention. Obviously, clients are looking for methods to basically prevent that obviously payments end up in the wrong account. Traditionally, there has been a focus on making sure that when we actually make a payment, that payment goes into the right account, which is what we call the frictionless payments. But fraud prevention has become, the forefront topic in the discussions with clients. I think you mentioned in the introduction, Greg, some numbers about, how big that fraud space is getting and how much money is being stolen by fraudsters on a daily basis, I would say. We conducted also a survey, I think it was last year, together with the ACT, that shows that in 2022, close to 60% of the corporate treasurers being interviewed were subject to some kind of a fraud attack or, a fraud action by fraudsters. So that obviously gives you an idea of how big that problem is. What we are definitely looking and seeing more and more is, there's different type of frauds, and we basically mentioned already some of these, sophisticated techniques. But what we call sometimes the invoice redirection or the man in the middle is probably one of the things that we see more commonly in this space, which is basically what I think Kemi was describing. Like, the corporate client gets an invoice via email with, updated payment details. The corporate basically, adjust the vendor master database with the new payment details, pays invoice, and then a few days later, they realize the money never reached to the right beneficiary because obviously it was sent by a compromised email account. So one of the things I'm going to try to speak today in the next section is how we, from a financial institution perspective, from a bank perspective, are trying to basically provide certain technology solutions to try and mitigate that fraud of the invoice redirection, which is probably one of the most critical fraud techniques that we have seen recently.
Yeah, thanks, Trevor. And indeed, invoice redirection and other threats are key to understand, first of all, and then after, what are the different tools or fraud prevention aspects we can handle. And this leads us to actually nicely to the second part of our webinar on how can corporates effectively protect from payment fraud. So Kemi, looking at you first, wanted to see within GXO Logistics, what are the different solutions you use to prevent fraud, and what type of technologies should corporates leverage? Because from our experience at Edgaden, there's no silver bullet when it comes to fraud. It's a matter of different tools, internal organizations, to make sure that you can try to mitigate all different types of threats. But can you tell us which solutions you use at GXO Logistics?
Yeah, definitely. Without going into specifics, what we've put together to minimize risk and safeguard our transactions is around a hybrid of tools, as you said there. At the end of the day, ours is a typical corporate. First and foremost for me is fostering education and awareness across our colleagues, making sure that we stay informed around, what's the recent, what's the trend in fraud. What can we do to boost and enhance our position to mitigate the risk? So we provide training to employees in identifying common fraud. Again, when we talk about training, the idea of cybersecurity is really topmost priority for our leaders, and ensuring that we've got up-to-date training in cybersecurity is part of our performance target. So it's mandatory, it's not a tick box exercise. But again, it's making sure that we are very aware as an institution, as an organization, and that people are aware of the types of fraudulent payments that can come to their desks, things around phishing emails, invoice manipulation, as Chema has mentioned. So that's our top priority, ensuring that there's education. So we partner with our key banks in accessing webinars, that are available. At the end of the day, the banks are in the forefront of, combating payment fraud. We collaborate with the banks as well in conducting workshops on current payment fraud. So one bit is about education and awareness. The second is around governance and oversight, where there's a dedicated governance structure. Again, we're talking about being responsive and putting together a prevention strategy out there. And in terms of our governance structure, it includes senior management, as I've mentioned. They're responsible and they have accountability towards fraud prevention. So again, they need to ensure that we have the right strategies in place. Policies and procedures, they're developed as well to incorporate all aspects of payment processing, authorization protocols, segregation of duty, approval workflows. The sort of first how would I put it? First aid in trying to make sure that we stay on top of irregular activities. Then there's a collaboration and communication, making sure that we're sharing information. So all of that is wrapped around governance and control. But secondly, we very big on implementing authentic measures, which is quite essential. Making sure that we have multi-factor authentication in place, a combination of biometrics, one-time passcodes. In terms of technology and authentication, we rely heavily on banks, on the sort of the infrastructure that the banks have provided us in making sure that our payment processes are within the safe place, making sure that we're taking advantage of the extra layer of security. There's a lot of mobile authorization of payments now that we use. And leading nicely is the sort of the employment of secure payment platforms as well, that have encryption protocols, that ensures confidentiality of our financial data. Essentially, it's in strong internal controls. And I'm aware of the fact that, out there's an evolution of advanced analytics and artificial intelligence in enhancing fraud detection, and we're hoping, that that's embedded in many of the various banking portals that we use or the payment platforms that we use. But we're also looking to explore and leveraging these capabilities. When we then talk about technologies, that corporates should use, I mean, it goes without saying, that it has to be linked to technology as it is. Again, it's around the duality of AI. So we're going to use AI to combat, AI powered sort of payment fraud. I know that out there, the fraud detection software, which we will be looking to embed into our various ERPs. Open banking is another one that I'm quite passionate about. I know that there's a lot that's been said about open banking. One of the benefits is the fact that we can use it to open banking will present the opportunity to bolster our defense mechanism against fraud. But I know it also has its own challenges in terms of making available customer data. Data encryption, again, we work together with our IT team to ensure that the core basics around securing our infrastructure is in place, around multi-factor data encryption, SSLs, endpoint security. Those are really book-standard security enhancements that we work together with our IT team on. Then lastly, we talk about supplier verification and due diligence. Again, this is where, we're looking to prevent a situation whereby we're paying money into a wrong, bank account just because our infrastructure has been breached. So then, there's a use of external supplier verification services out there to ensure, that we are onboarding our suppliers correctly. We are, embarking on our due diligence correctly, and we're verifying bank accounts as well.
Yeah. Thanks, Kemi, for a good and comprehensive overview of your approach regarding fraud. I think, as you mentioned, training is important, looking at all the process flows and the tools. Moving to you now, Ronan, from your perspective at Honeywell, what are the different solutions that you use to prevent fraud, and the technologies also underlying?
So very, very similar to what Kemi said there, fraud prevention, but we also very much focus on awareness as well. The Treasurer has instilled that as part of our job, we own the financial risk of the organization. We need to manage that financial risk, and we view fraud prevention, fraud awareness as part of that mandate. We've also had the regular dialogue with our CISO, so our Chief Security Officer as well. He starts his day assuming there is a breach, assuming there is an issue, and that's ultimately how we approach our activity. So if there's a payment or something like that, we need to make sure is it genuine rather than assuming it's genuine in terms of our approach. So breaking it down, how we look at it, essentially systems, processes, and people. So when we look at prevention or awareness, we check our systems or third-party prevention or third-party providers, be it banks or different ones. How secure are they? What are their defenses? How can they be compromised? How do we manage two-factor identification and so forth? Our processes, how robust are they? How are we naturally letting in a weak link? Is there a clear owner? Do we have segregation of duty as well within these processes? And then the people. So we arrange regular training seminars. Either we have our banks, trade, our payments team, or we have, as I said, the CISO come in, giving us high levels overview of what's happening in the market. And all our bank meetings specifically will revolve around fraud and fraud awareness to understand what's happening in the market, what the to ensure that we have that mindset and we don't just assume everything is normal until we figure out it's not. In addition to that as well, if a fraud has occurred or if we think a fraud has occurred, we have a fairly robust process in terms of who needs to be notified and encourage all our employees to act rapidly. Speed is of the essence, so we have a checklist available so we can gather various key information that will be able to help either our own investigations internally or if we're making a report to the various enforcement agencies.
Yeah, thanks, Ronan. And I like your approach: systems, processes, people, thinking, and like starting from a defensive to make sure that you're always on the right foot to prevent fraud. And also, you're right, when fraud happens, what type of processes and do you need to report to the respective law agency? Chema, now looking from your perspective as Deutsche Bank, a well-known international financial institutions, which fraud prevention solutions work best from your perspective?
I think that as we have discussed so far, obviously fraud techniques are being more sophisticated every day. There is obviously this additional topic of real-time treasury, so instant payments are raising, so obviously payments need to be made immediately, and there is no time, obviously, for mistake. So basically, when we speak to clients about fraud prevention, and obviously, as we discussed, there is many different techniques that we can also apply from a bank perspective to kind of prevent and detect frauds. But one of the advices we usually give to clients is, first of all, let's try to act as soon as possible in the payment value chain. So the earliest we can act, the best product result we're going to get, right? And the second thing is, let's obviously leverage on technology. And Kemi was mentioning about, different tools being developed. And in this context, I'm going to basically bring something that we've been developing along with other financial institutions for the last couple of years, which is what we call to develop a global framework for account pre-validation. What is account pre-validation? In very simple terms, is basically the ability to validate a beneficiary account, not just on the account number, so the account is existing in the books of the beneficiary bank, but also the account belongs to the right beneficiary. Okay, so conceptually, that's a very simple concept. But obviously, in order to establish a global framework for account pre-validation and being obviously something that can be used by corporates across the globe, there is two fundamental prerequisites that we need to put in place. The first one and most important is we need to have a global and robust data pool. Okay, so we need to be able to access data from different sources and combine this data in a way that can be used in a harmonized way. And I will come back on this point. The second thing also very important is also, as I said, leverage on the new technologies. And in this case, an API-based connectivity ensures a real-time connection across the financial institutions to provide a real-time response. And this is why we can quickly add and prevent of any potential fraudulent account. So as I mentioned, Deutsche Bank has been working on this for the last couple of years. We were one of the first banks to join an initiative that was initially led by SWIFT called SWIFT Beneficiary Account Verification. So Deutsche Bank was one of the first banks. I think today is probably around some 50 plus banks, global banks that are already part of that global network. There's probably some 100 plus banks that are in the different implementation processes. So the network is growing. We were also a founder member of another global initiative that is called Confirm by Link. So that's, again, it's a different technology, it's a blockchain solution, but the aim is basically to ensure that all participants in that network are able to exchange information and validate if an account is a valid account and belongs to the right beneficiary. And the third pillar, which is very important as well, is we need to basically tap into any specific local solutions or local market solutions that are available across the globe. And we will speak later about this, but there is many countries that are already in the process of developing local solutions or domestic solutions. For those of you based in the UK, for example, you will be very familiar with the so-called Confirmation of Pay, which is an initiative that was put in place a couple of years ago that basically allows all participating institutions to validate accounts in any of the beneficiary banks. So all of that makes basically that solution comprehensive enough so we can basically plug all these different data pools, harmonize in one single data flow into the corporate client and provide a real-time response. Obviously, for this solution to be successful, as I said, Deutsche Bank is one of the obviously leading institutions, but this obviously is a collaborative solution. We need to basically make sure that all the industry partners, being global institutions, financial institutions, being fintech companies, being local market aggregators, can collaborate and basically help in building that network. I think that's one of the probably, from my perspective, most successful initiatives we have taken in the last couple of years, because it does actually help us to prevent fraud at the very beginning, and also allows us to basically get a response on a real time versus maybe other solutions that require investigations and require more time. So that's something that I said I'm happy to speak in more detail, but that's something that I said is very predominant in the market. I've seen a lot of corporate clients being interested in this solution. There is many of institutions trying to go into this direction, and I said we have trying to basically harmonize this into this what we call global framework for account pre-validation.
Yeah,
that's one of the solutions, Greg, that I will basically highlight here.
Yeah. Thanks, Gemma. And before we move with Leon to the B2C, wanted to and thanks for sharing again the account pre-validation with some of the initiatives developed by Deutsche Bank, but the global initiatives also you mentioned, and some of the local solutions, because having a global approach but adapted also locally is very important, because fraudsters are unfortunately very nimble. We have a question from the audience, and I will read out to you. I think, Gemma, it may be for you. Are banks introducing again a name number check, whereby they compare the name of the beneficiary of the payment with a name linked to the account number in their books? And the comment is the following: this could already decrease the number of fraudulent payments. So I suppose that with the account pre-validation, this is something that you're trying to achieve, right?
Exactly. And that's exactly the concept. We are trying to validate not just the account number, but also the beneficiary name. So this so-called name number check. There may be difference versus what probably the question was implying is, in some cases, this was done only at the moment that the payment was done. So the payment was received by the beneficiary bank. They were performing that name number check. In this case, what we are kind of proposing is, let's try to advance this in the payment chain. So let's try to basically do this validation upfront. And one of the main advantages of this is that this is payment agnostic. So it does not, it's not linked or does not depend on the payment type. You can use this for payments, you can use this for collections, you can use this for B2B payments, for B2C payments, because at the end of the day, it's an account solution which is not linked to the payment. Yeah. So I think that's probably one of the most relevant aspects, but indeed it's connected to this so-called name number check. Yeah.
Yeah, thanks, Gemma. I think having this comprehensive solution can be very useful indeed, and covering many use cases. So we covered on one side the corporate fraud, which is of course very important. Let's move to the B2C fraud, and to you, Leon, from your perspective at Richmond and working with many of your well-known brands, what are the different solutions you use to prevent fraud, and what type of technologies that should corporates leverage to an extent?
Yeah, I probably won't go into the actual solutions, but what I can say is definitely it's important to use data to understand how your business works, because as you mentioned, there isn't a golden ticket, there isn't a one-size-fits-all approach, and every organization is unique and has their own fraud challenges. I mean, for example, with machine learning, we've looked at, but and it can achieve wonderful results when it comes to automation. But then the question is, does machine learning make sense if you're a merchant with low volumes and low ATV? And the same can be said when you look at, say, risk rules-based solutions. I've worked with both, and there are pros and cons. to both. But it really does depend on what makes sense for your business. And just to touch on what was mentioned earlier, people are definitely important. It's important to make sure that you have the right people in place and that you continuously upskill them. Because I've seen, even with the most advanced tools, if you don't have the right people behind them, it's useless.
Thanks, Leon, and definitely people the key in using tools. We've worked with merchants where sometimes they implemented a fraud tool and say like it's for them it was a bit like we tick the box, and a couple of years later when I talked to them, so have you updated your rules or looked at AI? They, oh, should we? Because they didn't have someone in charge of it. So getting the people and the right expertise is definitely important, and also the different tools. When, like, from a perspective, when we work with different merchants, looking at address verification, like or different types of fraud tools and checks allows to sift through the fraud and make sure that you can only keep the genuine orders. So we have, don't hesitate to ask additional question. We have a question on collaboration that we'll tackle in a few minutes, but don't hesitate also to ask other questions. We've talked about the different solutions that we've used. What could be relevant also is to talk about the internal organization. And Leon, continuing with you, if you can share us by and large how you organize internally to prevent fraud at Richmond.
Yeah, I won't go into too much detail for obvious reasons, but what I can say is that we do try to ensure that we have the right people in place, the right tools in place, ensure that we have dedicated expertise in all of our key regions, and also to build a culture of sharing trends and best practices. And again, education is key. So to ensure that we're continuously educating our retail teams, our CRC teams, customer relation teams, and also ensuring that our teams, as in our experts, go through regular training.
Yeah, and thanks, Leon. And you highlighted a key point, which is basically sharing internally. Because if we have a fraud in Brazil, it could happen then after it will move to Asia, Europe, or North America, and fraudsters, unfortunately, are very good at that. Ronan, from the perspective at Honeywell, can you share with us how you organize internally to combat fraud?
I can speak, let's say, a little bit more general rather than to get into the exact specifics. I suppose we look at our entry points. How many number of bank accounts do they make sense? Are we as lean as possible? So look at what are the entry points into potentially commit fraud to make sure that they're as streamlined as possible. We obviously look at then segregation duties. So if someone is making manual payments, why is it a manual payment versus rather than a batch file payment, for example? If it has to be a manual, do we have the right approval levels? And again, ring fence who can input, who can approve. So for example, even though I lead the treasury team, I'm not involved in the payment process. There's segregations of the duties around that.
And in a way, avoiding any type of conflict of interest and making sure that you have like two pairs of eyes to approve or challenge, right?
Yeah, like for large organizations, I'm trying to get a small invoice paid that a very difficult process, but it is by design. We want to make sure that there's sufficient checks throughout the chain to make sure that it's not just one person saying just do it, like you have with the CEO type fraud, that there is those time for people to stop, pause, does this make sense, before then they go on and then they go action. The worst we can do is have people acting blindly, and we expect people to, challenge, particularly if it's a manual payment, going, why is this outside of our cycle? Why is this not part of our normal processes? Specific, if it's claiming to be an internal payment, why isn't it going through our netting and so forth? So any manual payment is questioned before it's even inputted in the system.
Yeah, sounds good. Moving to you, Kemi, how you organize internally at GXO Logistics to prevent fraud?
Yeah, similar to what Leon and Rodon have said, and from my perspective, it's the same thing. Auditing our bank accounts is quite is a regular occurrence. Making sure that we're running a really lean bank account structure, again, to streamline access to some sort of dormant bank account being, falling into the wrong hands. Typical sort of making sure that you have two pairs of eyes, approving payments if we have to make manual payments. The high priority is ensuring that our payments are systemized as possible. I think one key point I'd like to highlight is then the issue of, where you come across situations where customers are changing bank accounts. What we've then implemented is even the video conferencing to make sure that, whoever is calling back the bank account to us is actually a person, and we're able to record it and maybe do another sort of verification at the back of it. Because at the end of it, there's so many documents flying around that can communicate bank accounts, but how can you verify that those bank accounts are actually legitimate? And same thing also applies to if we are changing bank accounts and we're then communicating our bank account details to, our suppliers. We have, very good process in ensuring that there's a person behind that sort of communication, as manual as it might be. So video conferencing is very big for us, again, just to try as much as possible to get over sort of the deep fakes and the generative sort of AI scans. Yes, we're very big on awareness, very big on training, and also making sure we have a protocol for reporting fraud as well, and sharing that information across the group so that people are aware of where the vulnerabilities are.
Yep. And thanks, Kimi. And I like the use of video conferencing because it's basically different communication channels. It's not only like sending an email and making sure that you can verify the identity of the different stakeholders you're in contact with. We talked about internal organization. Let's move now to best practices, because it's something that is always good to share. It's something which is non-competitive between across different industry or even within the same industry sector when it comes to fraud prevention, processes, controls, or in particular to avoid extreme events. Best practices can be relevant. Let's start with B2C and with you, Leon. What are the best practices that you could share with some other companies and corporates?
So first thing I'll say is, and I'll repeat this for hours on ends, is data is key. Leveraging your data is really key. But to start, I would say you should always start from the basics. So develop a fraud strategy that allows you to build strong foundations. For example, your risk framework should encompass at least these 4 pillars around prevention, detection, deterrent, and response. And what you find with these pillars, you can build a culture of fraud awareness, which includes anti-fraud training, onboarding, which is especially important for our retail environment. It allows you to pick the right tools and then identify the key KPIs to measure the performance of your anti-fraud teams, and also to detect any anomalies. And also it allows you to implement strong policies and procedures, which is the deterrent. And it also allows you to implement a systematic approach to responding to major fraud incidents. So these would be, again, I would stress, make sure these basics are in place. Make sure you build this strong foundation before you even think of looking at any fancy new tools.
Yeah, thanks, Son. And I definitely agree with you with having the foundation, having like a structured approach and also data-driven, because sometimes we can have some intuition, but once you have the data, you can make also relevant data-driven decisions and make sure that you can prevent fraud effectively for fraud being in-store or digital. Let's move now to the B2B best practices on the corporate side. Ronan, started with you and Honeywell. What are the best practices that you could share?
Very, very similar to what Leon has said there on the B2C side. Data is obviously a good start. If you suddenly have a request to pay a Mexican peso invoice and you've never paid that beneficiary Mexican peso before, again, that should be an outlier that should be flagged for you to investigate before the payment is released. So understanding your past payments get a model that will actually then demonstrate any outliers that could be outside of that norm. Also, again, as I mentioned earlier, in terms of why is something going outside a standard process, a manual payment versus your batch payment, or the other way around. And as well, if you have an intercompany netting process, why is that not part of your intercompany netting process, where you have a process or you have a system in place that's robust to controls? Why all of a sudden is now there a payment that's outside of that system, outside of that process, and who's the person then asking or making that request? Does that make sense for it to go ahead?
Yeah, thanks, Ron. And that's
I know, Kimmy, this is probably similar for yourself then.
Yeah, exactly, Kimmy. Anything to add from your perspective?
They made my job easy there, you know. So again,
We can't hear you, Kimmy.
oh, you can't hear me?
No, we can. Sorry, there was a bit.
Oh, now you can. Okay, good. Yeah, I was just saying that quite similar, you know, to Leon and Ron, and almost nothing to add. But from my perspective, again, yes, and we talk about data, and there's so much that data can give back to us, because with data we can learn our business, we can learn our processes, you can detect the exception. But again, with corporates, many corporates out there, there's the challenges of having fragmented systems all over the place. So therefore, you don't have coherent data upon which you can build your algorithm or your AI or machine learning. But having said that, you know, it's about system enhancements. The best practice around there is making sure that that infrastructure is solid, and that you have the secure payment channel, encryption technology is up to date, no doubt about it. Also having that very important key fraud strategy. It's very important, knowing who the key stakeholders are within the fraud strategy. You know, what can you do? What's our policy around, what's the policy around preventing, and what's the policy around response? Because it will happen. Hopefully it's not, you know, in a high percentage, but when it happens, you know, what is the policy towards addressing it?
Yeah, no, that's right. And unfortunately, fraud happens, but you want to decrease it as much as possible, so that it is as little as possible. And then after, define the processes, and as you mentioned also before, sharing internally, so that if you've been hit once, you're not being hit twice with the same type of fraud. Moving to you, Chema, from your perspective at Deutsche Bank, what are the best practices that you can see in terms of fraud prevention? And we'll also have a question from the audience asking how pre-validation can help regarding fraud prevention. So maybe if you can provide a bit more detail there, that could be helpful.
Yeah, I'm gonna basically maybe focus on two different examples that we found talking to different clients in terms of use cases. Okay, one is more on the B2B, the other one is probably more on the B2C. So on the B2B, one of the use cases that we found where these kind of validation solutions could be very, very useful is on what is called the supply and onboarding. Okay, so Kemi was mentioning about this video conferencing technique. There's obviously clients using different other methods that obviously they're effective, because at the end of the day the intention is to confirm that you are paying to the right beneficiary, but obviously in general they're quite labor intensive. So one of the areas where we think that this type of validation solutions can help is basically integrating your supply and onboarding with kind of an API service. It can be different techniques. It could be just having a simple web portal where you just input the account number, beneficiary name at this onboarding of a supplier, and you validate, or you can just upload a file and do this for the whole number of suppliers, and then you basically get a response that basically confirms that the supplier details are the ones intended. Or you can also, for example, do this on a regular basis when you want, for example, to validate your vendor database on a regular basis to confirm that all accounts are still valid and all accounts basically belong to the right beneficiaries. So that's a very common use case that we are seeing talking to clients about how to use this validation. It could also be, as we discussed before, at the payment cycle. So you could actually link that solution to say, okay, I basically run my batch of payments, and then before actually executing the payment, I basically triggered that validation that I get a response. The challenge with this obviously is that you need to have a more automated process, because in some cases, when you are validating an account number, I think the response is very simple. It's a yes or a no, or match or not match, because it's either account exists or doesn't exist, an account is open or doesn't allow payments. But when we're talking about name validation, the challenge obviously is there could be a full match, in which case obviously there is no doubt and you can make the payment. It could be a non-match, in which obviously you will not or will not advise you to make that payment or onboard a supplier. But in many cases, the response is going to be a partial match. Okay, so the name is similar, and in some cases we can even disclose. Okay, when it's a partial match, we can even disclose to you what is the actual name being provided by a beneficiary bank. In some other cases, depending on the legal framework, we may not be allowed to disclose that name, but at least it's a partial match. So that means that you probably need to do some more investigation. But for all those cases in which that match is happening, that gives you a very a signal that is a green light for making your payments to the beneficiary. So that's a supplier onboarding. On the B2C, we also found a use case which I think is quite useful as well, which is more about in the collection side. So when you are trying to set up direct debit mandates, you want to make sure that the account that you're going to use for making the collection is the right account and it's a proper account. So in some cases, our corporate clients are using that kind of a solution to basically validate those, in this case, debtor accounts before they basically set up the mandate and they start the collection process on the account. So these are two, potential use cases that are very helpful. There's obviously possibilities that we can, and we have also products that go into that direction, which are more products that raise alerts. For example, every time that you are making a payment to a new account, we can raise an alert saying, okay, that account has never been used before, or we can establish certain limits where you can, basically raise an alarm if the payment is going, through different limits, or it's an unusual pattern, for example, that you never, make that type of amount to that particular provider. So there are different approaches. But as I said, the earliest you can do the validation, the better. And in this case, that's why our suggestion is to, whenever possible, use this type of validation solutions, because it does help a lot to reduce the effort on the corporate side to validate the suppliers, but also it helps in terms of facilitating later on the payment flows when they happen. Yeah, so these are two use cases that we saw frequently speaking to clients in this space.
Yeah, and thanks, Chema, for sharing. From a perspective at Edgaden, what we see in terms of best practices is like defining, as was mentioned before, defining like a solid framework, selecting your tools, and it's not one tool which is a silver bullet, unfortunately, but it's a combination of different tools to have the information pre-validation being an important one. For instance, automated the processes to define the rules, AI on others, then have to have also some manual processes with process flow, with the correct expertise of people, data, and Leon, you mentioned that, to make sure that you understand the pattern of fraudsters or transaction order, and then after like identifying when the fraud happens, in that identifying the root level, what are the causes, and this is something which is iterative and ongoing. And actually that leads us to the third part of what we can expect in the future. One thing that has been stressed is, to a certain degree, is you can't do that alone. You need to share internally, but externally. And the question that we would start with you, Kemi, how can the different stakeholders work together, and in particular work with banks to mitigate risk, and why collaboration is important? And we only have 6 minutes, so if we can be a bit shorter in our answers to make sure that we can also take a question from the audience.
Yeah, so thanks. Our key collaborators or key stakeholders when it comes to combating payment fraud are, of course, as you said, the banks, the technology provider, and the regulators. I think that's another key provider. I mean, each stakeholder brings unique insights and expertise to the table. Our businesses, I understand our business. We know what the transaction partners are. Banks have insights into financial transactions and patterns across multiple clients. Also, regulators, they provide sort of the oversight and set the standards. So by collaborating, the stakeholders can leverage their combined knowledge to develop holistic fraud prevention strategies. Secondly, I'll talk about data sharing. As Leon has said there, data is key. We're able to share data across the sort of three key stakeholders. Then at least we begin to learn, begin to see patterns. We're able to flag suspicious transactions, and then relying on the regulatory, the regulators again ensures that, as key stakeholders, we're all aligned, in combating payment fraud. So technology has a lot to play, here.
Thanks, Kemi. Ronan, do you have anything to add and to Kemi in terms of how stakeholders can collaborate together?
No, again, I'd echo what Kemi was saying. One thing I probably would add is more legislation has brought us so far in the sense of the beneficiary check, and in a certain way, the UK was a little bit ahead of the EU. The EU was like the onus on the banks to do it, while the UK legislated on it. But there definitely needs to be a industry-led collaboration between the corporates and the banks to better protect us, because we all have skin in the game here. It's about how we can share that data across jurisdictions in some case, so we can get that information. So if I think I'm paying X and they go and check it with that bank, there is a way for banks to be able to assist, rather than having the legislation enforcing it, because it needs to be, it's gotten us so far, but the legislation has been quite limited. And now that it's like all the people on the call, it's a very important topic for us on the call, and the wider community at large, and that we work together to try and get a more robust collaboration on this.
Yeah, thanks, Ronan, and that's a good point indeed. Leon, from a B2C perspective, what do you think can the collaboration bring to the table?
Yeah, without sounding cliche, sharing is caring. I do the heart. So for us, where we have good relationships with the banks, we see positive results when it comes to identifying account takeovers, even when it comes to identifying first-party fraud. So if we can just open the floodgates to a culture of sharing, even with our competitors, obviously being mindful of PI data, but we can at least share trends, because usually for us, what's happening with us is happening with someone else. So where we see the collaboration happening, we see really strong positive results.
Yeah. Thanks, and I think it's a key point too. It's not collaboration for collaboration; it drives positive outcome, and it also educates or allow to prevent subtypes of fraud. So Chema, what do you think that from the collaboration standpoint, and as it's a question also from the audience, do you think that there is enough collaboration between, say, the financial institutions and corporates, or how can we increase that to a certain extent?
I mean, I think this is definitely an ongoing process. I can say that when we started that initiative 2 years ago, probably there was not much awareness about that topic in the market. I think today, across all financial institutions globally, fintech companies, even corporate clients, they are all basically very focused on that topic. So that collaboration is definitely growing, and that's why we are basically expanding that solution across the globe. Still, obviously, it's not a 100% solution, but it's definitely expanding very quickly. The other aspect I think was mentioned, and I think that will also help, is regulation. So regulation is going to basically force us to speed up. You probably know that the European Commission published a draft regulation in October 2022 about instant payments, so just making instant payments the new norm in the SEPA region. And one of the parts of this regulation is what is called the Convention of Pay. Will basically mandate all the banks in the European Union to offer the same kind of service that is today available in the UK. So that's going to be another driver in which all these different local solutions that are currently flourishing in different markets in the UK, in the Netherlands, in Italy, in France, they're going to be interoperable, or they will need to be interoperable to basically allow financial institutions to access that data in an open way. So what we are trying to build now is that kind of a global network of banks using that common API framework to connect. But obviously, at the end, we need the data providers, and that regulation will help us to basically streamline this data sharing and make that solution obviously more robust. So collaboration, regulation, both actually coming together and hopefully get us to the point in which we make that pre-validation solution a global, accessible solution for all the corporate clients.
Thanks, Chema. And if we can have 1 minute to conclude the webinar, I'll ask each of you, if you had a crystal ball, how do you think that fraud will evolve in the next 3 to 5 years? We have a question in the audience about generative AI system. Can we trust video deepfake? So maybe a couple of sentences each to close. Ronan, if you had a crystal ball, how the fraud will evolve in the next 3 to 5 years from your perspective?
It's just going to be more of it, more complicated, and coming from all jurisdictions in all locations and from across all industries.
Thanks. Kemi, from your perspective?
It's the same, yes. As technology evolves, the sophistication of the fraudsters will also evolve. But then comes the duality of AI, where you use AI to combat AI. So that's where we are.
Thanks, Kemi. Leon, from your perspective?
It's hard to add more. Since PSD2, we've seen it become very difficult for fraudsters to commit fraud online in a typical way. So indeed, we see them becoming more complex, moving more towards deepfake AI, and also social engineering, I think. So eventually we'll just have AI versus AI in the battle of good and evil.
Thank you. Chema, from your perspective, your crystal ball?
Yeah, I think that definitely our dream is to have this kind of global solutions available at some point. I think that, as you mentioned, all these new regulations, PSD3 will help in Europe, and all these global alliances of global institutions will also help. So even though fraudsters will definitely be more and more sophisticated, our intention is doing as much as possible information sharing, because this is the only way to combat the fraud, making sure that all the financial institutions with all the right data about the accounts are actually collaborating in a way in which we can share the data with the corporate clients.
Yeah, perfect. Thanks, Chema. So thanks all to the participants. And Mariel, I hand it over to you to close the webinar. We try to address most of the questions. If some we have not been able to address, I'm sure we can handle it offline.
Thank you so much, Greg. And I wanted to thank you for chairing the session and the speakers for sharing their experience and the best practice. It's been fantastic. I would also like to thank Deutsche Bank for making this event possible. And finally, thank you all for being here. I hope you found this session helpful. Please feel free to continue this conversation with the speakers and colleagues of the Global Treasury Leaders community that I mentioned earlier. You can join using the link I shared with you earlier on the chat. I'll ask Kendall to maybe put it there again. If you want to join, it's free. And through that platform, you can exchange experiences and ask questions to all the members of the community, and we share content on a regular basis. Our next webinar will be on the data-driven treasury. We'll be sharing information shortly, so please watch out for our emails. I hope to see you soon, and thanks again. Goodbye to all of you.
Thank you.
Bye.
Goodbye. Thank you. Bye.